Eric Muathe, Muathe.com. Even as we see the Dow moving to all-time highs, some stocks are stumbling. Let's take a look at two examples. Let's begin by taking a look at SCMP, down this week about 15%. Let's take a look at why this could be. And my explanation is, if you take a look at the RSI, it gives you a lot of insight. Here we can see that coming off the highs here, the RSI breaks down right there. Now that RSI breakdown, keep in mind, does come in play in the current market. Stocks tend to have some type of memory. If we draw a line from that sentiment break, so draw a line from there, you see what's happening here is we have what looks like a double top on the weekly RSI here and here, which might explain why the stock is down. Now that's the weekly. If you take a look at the long-term monthly chart, we can see that on the long-term monthly chart for SCMP, same type of analysis. There was a break based on RSI lows. So take this trend line here, recently broke down there, and this is on the monthly chart, all data. Once we broke down, stock's been down since then. So the RSI is, in essence, is coming back to test that RSI break. Now that RSI break there, early part of 2016, and right now again we can see evidence of resistance month to month, which might be explaining why it is down. So that's one view from the monthly chart. The other view is a backtest failure line, and that backtest failure line can be seen right here. That line corresponds with the recent RSI break there, and in the current market, coming back to backtest that line, we seem to be unable to move above that. So of course we can use that as a reason to suspect lower prices. So even here we can see that month to month, the monthly chart does not look great. Keep in mind, there could be more downside if the RSI drops below RSI 50 on the monthly chart. The second stock I want to take a look at is Sina, and here we can see that it is coming off the highs for early this year. And the best way to show this is to take a look at the monthly chart. And you have to go to this break here. This RSI trendline break is critical in understanding what the stock is trying to do. Again, I call this the uniformity method. And you can find the playlist that discusses this concept. It's an original concept called the uniformity method, which is a look at the RSI. So check this out on my YouTube channel. And so again, what happens here is figure out where the RSI broke down. There was that trend line break. Remember, stocks have a memory. And now we are coming back here in 2016. And without any type of adjustment, this is uniform activity double top rejection on the red line there and also there. So that has been good enough to stop the recent attempt to move higher here and here, which might explain why over the last couple of weeks and months the stock's been forced here to start coiling down. So because of that sell signal on the monthly chart, and especially because it is a double top, it might suggest that still we have remnants of bearish action which could take weeks and even months to play out. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESCS. Oh,